Our economic system is designed to keep you poor, but you don't gotta take my word for it. Just listen to the government. The government says that student loans are financially hurting American citizens. But on the flip side, student loans are also the #1 largest asset on the United States government's balance sheet, which allows them to keep borrowing more and more money. Banks will tell you that credit card debt is bad and it's important for you to manage your debt levels. But those are the same banks that profit when you're drowning in debt. Not to mention that corporations spend billions of dollars a year hiring the smartest MBAs in the world to get you to open up your wallet and spend with them, even if you don't have any money to spend. Now, this is where most people get angry and they say everybody is evil, the whole system's corrupt, but I want you to do something a little bit different. Instead of getting angry, I want you to get smart. I want you to learn how our economic system works. That way you can win and build wealth in this economic system. That's why today I want to go over 7 money lies that all of us are conditioned to believe. That way you don't keep making the same expensive mistakes as the majority of people. Money lie number 1 is that going to work will make you rich. There's a famous book called Rich Dad Poor Dad, which if you're starting your financial education journey, I highly recommend you read it. But the first page in the first chapter of the book starts by saying the rich don't work for money. The poor and the middle class do. And I still remember the first time I read this, it blew my mind understanding that rich people look at their money very differently than everybody else. I'll show you. The majority of people look at money like this. I make money and then I buy DS. What's DS? Dumb stuff. And then you work to make even more money. That way you can buy more dumb stuff. You make more money, you drive a nicer car. You make more money, you live in a bigger home. You make more money, you go on some more fancy vacations. This is how the majority of people operate. And it doesn't matter if you're making $50,000 a year, $500,000 a year, or $50 million a year. Most people who earn money live in this type of financial system, but people who are actually financially wealthy, what they do is they're working to earn money, not so they can buy dumb stuff. They make this money, that way they can buy investments. And then they use their investments to buy the dumb stuff. So you're working to buy investments. That way investments can pay you more money to buy more dumb stuff. You make more money, you buy more investments. And then when your investments pay you more money, you buy more dumb stuff. It's a different way of thinking than this because this takes more delayed gratification. This requires you to make that $10,000, not buy a Rolex, buy some stocks, buy some real estate, buy some other investments, and then wait for those investments to pay you, and then use the cash from those investments to then pay you that dumb stuff. It takes more time, it takes more work, it takes more sacrifice, but this is where the real long-term wealth is built. The majority of people are just working to buy a bunch of dumb things, but what wealthy people want to do is they want to buy the investments first and then let the investments pay for the dumb stuff. Money lie number 2 is you can save your way to wealth. Let me ask you a question. How much is this $100 bill worth? It's a trick question. The $100 is worth $100, but how much $100 can buy you is going to change depending on when you're alive. Because the $100 will buy you way less stuff today than it would have 10 years ago, and it's also going to buy you less stuff than it would have 20 years ago. And the reason why is because our money, or what we call money, these paper dollars, are really just pieces of paper. And the value of these paper dollars are falling because of something called inflation. Now, inflation became popular after the pandemic, but it didn't start during the pandemic. We've been seeing inflation for many decades. In fact, the real start of bigger inflation numbers started after 1971 when our dollar was taken off of the gold standard. Before that, if the United States government wanted to print and spend more money, the Federal Reserve Bank and the government needed more wealth. And that wealth before 1971 was measured through gold. If the government wanted to spend more money, they needed more wealth, meaning more gold. But then we ran into some financial issues in 1971. So President Richard Nixon took the dollar off of the gold standard on August 15th, 1971, and that allowed the government to spend a lot more money, and it allowed the Federal Reserve Bank to print a whole lot more money, which then created more inflation. Because now you can print more dollars without needing more wealth, which then causes the value of the dollar to drop, which has changed the way that money works. Let me show you. Now, I do want to mention that on the 53rd anniversary of the dollar being taken off of the gold standard, I'm hosting a live investor workshop talking about how money is changing now in this economy. and how you can build wealth and catch new financial trends in this changing economy, because, well, money in 2024 is not like money in 2023, and it's also not like money in 2013. So in this workshop, I'll be going over a lot of things of what's happening in the economy, what's happening with money, and how you can build wealth in this changing economy. It's completely free, so if you'd like to join, I got a couple times. It's live, so there's only a couple times. If you'd like to join, I got the link for you down in the description below. But if we go back in time and we take a look at money back just 2 decades ago in 2004, what we'll see is that in 2004, the median household income was around $57,500. And if you wanted to buy a new car, it would cost you around $21,600. And if you wanted to buy a home, the median home in America was selling for $195,000. Let's fast forward to today. The estimated median household income in 2024 is $78,000. That's an increase of 35%. While at the same time, new cars are selling for around $47,000 on average, which is an increase of 117%. And the median home in America today is selling for around $412,000, which is an increase of 111%. This is what inflation does. It means that the prices of things are rising, and in many instances, it's rising faster than incomes, because yeah, incomes have gone up, just not as fast as your housing costs, your car costs, and a lot of other things that you purchase to survive. But that's just part of the picture. What happens if you were to save up, I don't know, $10,000 in 2004, and you took that money and you put it under your mattress? Or you took that $10,000 and you put it in a bank account that's paying you 0.03%. Then what? Well, the $10,000 would be essentially $10,000 today in 2024, but the prices of things would have risen a whole lot faster, which means that $10,000 that you worked to save up in 2004, that you worked really hard to earn, that you worked hard not to spend, that you worked hard to save, lost a whole lot of buying power because you thought you were doing the right thing, which is saving. Now, this doesn't mean you shouldn't save any money. This means you want to save your money strategically. Number one, if you have savings, look into a high-interest savings account, but save some money for an emergency, and then save some money for your investments. That's where the wealth is built, because you want to be growing your money, not just having your money sit there dead, because if your money is sitting there, it is losing, it is dying, because inflation is eating away at the buying power of your savings. Money line number 3 is that somebody else is going to fix your financial problems. If you're a Democrat, I'm sorry to break it to you, but Joe Biden is not going to fix your financial problems. And if you're a Republican, well, sorry to break it to you too, because Donald Trump is not going to fix your problems either. The president is not going to change how much money you have in the bank, and it's not going to change the issues you have with your credit card company. You have to be the one to take care of your finances. Like what I said in the beginning of this video, guess what? Our government profits when you're not financially educated. Why? Because number one, they're going to sell you the student loans that's making the government rich. Number two, our government is going to tax you the most when you are just an employee and not an investor. And I can tell you this as an attorney who's not your attorney. Our tax code taxes income differently. What that means is our tax code has 3 different buckets or categories of income. There's portfolio income, passive income, and earned income. This earned income, also known as ordinary income, is the money you make from your job. This is your W-2 income. This is the income that comes with the highest tax rates and the lowest tax deductions. Then you have portfolio and passive incomes, which are 2 different types of investment income. If you go out and invest in a stock, you buy it for $100, and then 5 years later, it goes up to $200 a share, and then you sell it for profit. That's long-term capital gains rates, meaning you get lower tax rates. That's called portfolio income. That type of investment income comes with lower tax rates. So if you make $1 million here versus $1 million here, you get to keep more of that money after taxes here. Today, the top tax rate for your long-term capital gains is 20%. Here, your ordinary tax income, well, this is closer to 40%, meaning if you make $1 million here versus here, you'll be paying almost twice as much in taxes because you earned that money from your job instead of from your investments. Your passive income is a different type of investment income. If you go out and invest in rental properties and now you're getting cash flow, that's considered this passive income. And this comes with higher tax deductions and higher tax write-offs, which means you can make money and pay less money in taxes because you get to tell the IRS legally that you want to write off some of those taxes, because that's what the tax code says. Not to mention the unfortunate reality that many people use their banker as their financial advisor. When people want to know how big of a home can they purchase or how nice of a car can they afford, they go to their banker. And your banker is incentivized to sell you more loans. Now, that doesn't mean they're necessarily an evil person. They're a salesperson. They're in the business of selling loans. The bigger the loan they sell you, the more money they make. And so what people do is when they ask the banker, how much loan can I afford? The banker will always say, more. And this is where you have to be the one to get financially smart. Don't rely on your banker. Don't rely on the government. Don't rely on corporations. Build your own financial education. And unfortunately, schools don't teach this. And this is where if you want to build wealth, you got to learn the rules of the game. You got to learn the rules of money. School teaches the rules of how to get a job. And they don't always do a good job with that. But if you want to learn the rules of how to build wealth, you got to understand how our economic system works, because that's what wealthy people are focused on. They're focused on growing their incomes so they can buy more investments and how they can keep more of that money. Because, well, taxes are a big expense. And if you want to win in this economic system, you got to understand how to play in the game. Money line number 4 is I deserve a nicer car. The average American would rather look rich than actually be rich. Now you might say that and say, no, Jaspreet, everybody wants to be rich. Well, your actions speak louder than your words. The average new car payment in America today is over $700 a month. And I'm going to round down just to $700 a month. This does not include your premium gas. This does not include your expensive car insurance. This does not include the expensive oil changes, the maintenance, and everything in between. But then what ends up happening to so many people, which is such a crazy concept, is people will work for 5 or 6 years to pay down their car. And then finally, 6 years later, you pay off your car, and then people feel weird not having a car payment. And then what they do is they trade in their car, buy a new car, pay a bigger down payment, and then you start the payments game all over again. And now you end up in car payments for the rest of your life because you think it's normal, because every single person has a car payment. And the reason why is because when you graduate college, you're 21, 22, 23 years old, you start making $50,000, $60,000, $70,000 a year. You've been working so hard, you finally want to show it off. And now that you got a good big boy or big girl job, you got to get yourself a nice big boy car, which is a nice BMW. Well, that BMW might cost you $500, $600, $700, $800, $900 a month, which might not seem like a big deal because your banker says you can afford it. But let's look at what the real cost of that is, because the cost is a whole lot more than the $700 a month, because you also have the opportunity cost of being able to invest that money, which you no longer do, because you took the money and you gave it to BMW and your banker and you said, hey, you get rich, I'll look rich. You got the BMW, you look rich, but BMW and your bank are the ones that actually got rich. If you would have taken that same $700 a month, and instead of giving it to BMW, you took the money and you invested it, I don't know, into the stock market. You did something simple. You just put your money into a stock market index fund that just meets the returns of the market. Over the last 100 years, we've seen the stock market grow by around 10% a year on average. That doesn't mean the stock market always grows by 10% a year. This is the average. And if you did this for 30 years, well, after those 30 years, you would have had an investment account worth over $1.5 million. Instead, you got a car in your driveway, which makes you look rich. Maybe you upgraded to a Mercedes-Benz, so you look rich, but you have nothing in the bank. You got to decide. What would you rather want? Do you want to have what you feel like you finally deserve, or do you want to actually earn the wealth? Money line number 5, investing is for other people. Back in the early days of me getting started with financial education, one of the things that I used to do very regularly is go into Detroit public schools and talk to some of the kids about life, money management, leadership, and everything in between. And one of the topics was how do you build wealth? And we would talk about this concept of investing. And I would keep hearing that investing is this thing for other people. Investing is this thing that rich people do. You have this mindset that I need a lot of money to start investing, I need a financial advisor to start investing, or I need to have this super smart skill in order to start investing, which is absolutely not the case. Nowadays with technology, you can start investing with less than $100. I mean, you can start investing with as little as $1 with a lot of brokerages and a lot of platforms out there now. And you don't need a lot of skills or education to go out there and invest. Unfortunately, the internet makes it seem like you have to be able to find the next Tesla, you have to find the next Amazon, you have to find the next Microsoft. But that's not how 98% of people will actually build wealth in something like the stock market. There are funds that you can invest in that you don't need any sort of real financial education or experience or knowledge to go out and do. All you can do is invest in one of these funds and get exposure to a lot of companies or the entire stock market. I'll give you a couple examples, but I'm not telling you what to invest in because, well, I'm just a random guy on YouTube. Okay, you got to do your own research, understand that investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. If you go out and invest in this fund called VTI, any stock brokerage will let you go out and invest in this fund. It's called an ETF, which is an exchange traded fund. But if you go and invest in this, you are investing in the total stock market, meaning you're essentially buying a little bit of every company that trades on the stock market. Or you can get a little bit more sophisticated, a little bit more niched down, and invest in a fund like SPY. This is a fund that invests in the S&P 500, meaning this is a fund that invests in the 500 largest companies in the stock market. So instead of investing in all the companies, you can just invest in the largest 500 companies. Now, instead of having to research what are the best and the strongest and the growing companies, you could just invest in the largest 500 companies. There are funds for anything that you can imagine. You can invest in funds that give you exposure to technology, or artificial intelligence, or healthcare, or international companies, or dividend-paying companies. You got to do your research to see what it is that you want to invest in, but you don't need to be a genius to start investing. You just need access to the internet so you can open up a brokerage and then find the right thing you want to invest in and start funding it and stick with it and learn, because you're going to lose. You're going to lose sometimes. That's the way the markets work. But if you can stick with it and keep working to grow, you invest every week, you invest every 2 weeks, you invest every month. When the market's up, when the market's down, you stick with it. When it's raining outside, when it's sunny outside, you stick with it. Whether it's your birthday or your anniversary, you stick with it. If you can do that, you're going to be able to build wealth over the next number of decades. But it takes that discipline to stick with it, even when things get tough. Money line number 6 is you can build wealth passively. Here's some reality. There's a lot of people out there that sell this whole idea that you can get rich without working hard. And they're catering to lazy people, and they're usually selling you a service that way they can get rich while you don't get anything. The reality is, if you want to build wealth, you need the right education. And part 1 to that is you got to work hard. If you don't work hard, if you're lazy, it's going to be impossible for you to really get anywhere. Then once you work hard, you got to understand that that's not the end. Because you have a lot of people that work hard, but never actually build any wealth. I mean, you can work 80 hours a week, but if you don't know what you're doing, you're not going to build wealth. So once you work hard, the next thing you got to do is work smart. What that means is now you work to make money, but now you're not spending all of your money. That way you have some money to invest, because now your money can make you money even when you're not making money. That's what working smart is all about. That way you can get paid when you're sleeping, you can get paid when you're on the beach, you can get paid when you're at work. That way you can double your efforts, because your money can work 24 hours a day, but you can't. But then, if you really want to build true wealth now, is you got to add a number 3, which is working in the right direction. This is that financial education of how do you actually invest your money to get the best returns, because there's a big difference in how much wealth you're going to build if you can grow your money by 3% a year versus 10% a year. And this is what that working in the right direction is. This is studying the financial trends, learning how to grow your money the right way, learning to see how you can see the most scalable growth, because sometimes people are trying to build wealth by climbing up a mountain with a 100-pound weight on their shoulders. But sometimes there are easier options if you just spend some time studying what's happening. That way you can see more growth. And this is all about working in the right direction. But it takes that financial education. Now, if you want some resources on how you can learn more about how to do this, obviously we're going over this on my workshop, but we have a free newsletter in my company Briefs Media called Market Briefs, where my team is breaking down what's happening in things like the financial markets. We break down the economy, the housing market, the stock market, crypto, and global economy into a fun, witty, and easy to read newsletter. If you want to join, it's completely free, and I got the link to how you can join down in the description below. And money line number 7 is you cannot become wealthy. This one is a little bit different than the other ones, because this one is more about your mindset rather than the actual numbers. And the reality is, you can be your biggest roadblock. If you have the technology to hear what I'm saying, and if you have the capacity to understand what I'm saying because you speak English and you know what I'm saying, well, you have the tools, you have the resources necessary to build wealth, period. Now what you need is the mindset, and there are 3 mindset things, mindset traits, 3 mantras, whatever people like to call them. There are 3 things you got to understand. Number 1 is that money is a tool. Number 2 is that I will become wealthy. And number 3 is that money is abundant. You have to believe these 3 things with your whole heart. That way now you can understand that you can and will become wealthy. Starting with money as a tool. Some people are so poor that all they have is money. Let me show you what I mean. I call this my quadrant fit theory. And my goal for you isn't just to have a big bank account. It's for you to have a fulfilled and happy life. Because what's the point of having a lot of money if you're miserable? Or if you're on your deathbed. So what I want you to understand is that if you want to live a happy and fulfilled life, there are 4 what I call fitnesses that you have to understand and master. Number 1 is you got to be physically fit. Because if you're morbidly obese, if you're on your deathbed, if you're unhealthy, all you want to do is be healthy. You don't care about how much money you have in the bank. You want to feel good. Second, you want to be mentally fit. Because if you're depressed, if you're anxious, if you're surrounded by toxic people, it is impossible for you to go out and really appreciate the value that money has. And what you'll think, or what a lot of people will think in this instance, is if I have more money, then I will be loved, I'll be happy, people will like me, people want to be my friend, then I'll be able to find my husband, my wife. But then when you get that money, you realize that that's not the case, and then you become even more depressed, even more anxious. If you are struggling with this mental fitness, get help, get counseling, listen to podcasts, listen to audiobooks on this. There are a lot of resources out there nowadays to learn, and maybe you got to cut out some toxic people in your life, because if there's a lot of people that are bringing that negativity in, you got to get out. Third is spiritually fit. This does not have to do with religion. This means, what is your purpose? What is the reason to get out of bed every single morning? If you woke up tomorrow and you had $10 million in the bank, what are you going to do? Maybe you go out and travel for a little while. Maybe you go out and just buy some fancy things, but eventually you're going to get tired of that. What is your reason for still wanting to get out of bed if you had all the money in the world? What would you do then? This is what your purpose is. What is your reason to get out of bed every single day? What is that spiritual fitness? Warren Buffett goes to work every single day, even though he has more money than he can even think about spending. It's because he loves doing what he does. What is your purpose? And this is where you got to be financially fit as well. People say, oh, money doesn't matter. You shouldn't stress about money. You shouldn't worry about money. Money is taboo. Money is evil and all these things. But the reality is, it costs money to eat and it costs money to feed other people. You cannot pay your credit card bill with love, as much as people want to wish that they could. You pay your credit card bill with cash. You pay for your rent with money. You need money to eat. You need money to survive. You need money to pay for your wife's vacation. You need money to pay for your kids' college. You need money to do these things. So don't let somebody tell you that money doesn't matter. Because if you don't have money, guess what? Then what happens is you don't have the ability to eat healthy food. You don't have the ability to take care of your mental health. You don't have the ability to really find your purpose, because all you're worried about is how can I pay the bills. Money is important, but it's not the only thing. And this is where I want you to understand that money is a tool. It just amplifies who you are. It gives you more fuel to do the things that you want to do, but it's not the only thing that matters. And this is where you got to understand how money plays a part in your life. But the second part to this is understanding that I will become wealthy. Not that you might, not that you can, but you will become wealthy. Because if you sit there and you tell yourself that somebody like me, somebody who grew up the way that I did, somebody with my parents, somebody with my background, somebody with my experience can't become wealthy, guess what? You're not going to become wealthy. You've already told yourself you're not going to. And if you told yourself you're not going to, I guarantee you're not going to become wealthy. And you got to change that negative mindset, because that negative mindset is stopping you from finding opportunities, because there are opportunities all around us. And in order for you to see it, your brain has to be able to actually visualize it. I'm not trying to talk about that woo-woo stuff and all that hippie stuff. I mean, seriously, there are financial opportunities around you today. But in order for you to see it, you have to believe that you can capitalize on opportunities. And the final part to this is understanding that money is abundant. Now, I'll start with the technical way to understand this, which is the Federal Reserve Bank, our central bank of the United States, has printed trillions and trillions and trillions of dollars. There's a lot of money out there. All you need is a little sliver of that to really make an impact on your life. If you had an extra $1 million, well, that could really impact your life. But that's a very small amount of money in our circulation. But the reason why so many people get caught up with this is they get caught up in this mindset of, if I give you money, you get rich, I get broke. I stay poor, you get richer. And then you get this real scarcity-minded thinking. But if you want to start building wealth, you have to start building more of an abundance mindset and understand you can get rich and I can get rich. That there's enough money for both of us to have money. And there's a lot of different ways that this is going to play out. Because as you start building your financial education, you might want to start investing in your own financial education. You might want to start putting some money to learn. That might mean reading books. That might mean taking classes. That might mean getting coaching on certain things to help you grow your business, to help you grow your income, to help you grow your investments. But you're never going to want to actually take any action if you're always worried about what it's going to cost you, instead of looking at what you can get out of it. Because there's a lot of money in the world. And if you believe money is abundant, well, now you have the opportunity to find more abundance in your wealth as well. Now, of course, if you want some more resources, you can check out Market Briefs, or you can check out my free workshop on August 14th and 15th. Your credit score is not a measure of how much money you make, and it's definitely not a measure of how wealthy you're going to become. Your credit score shows how likely you are to pay back your debt. It's not even that accurate. Oh, did you just cancel a credit card? Well, now your credit score just dropped 45 points. You've only had a credit card for 3 years? Minus 61. You don't have any debt. You have a 0 credit score.